You may have heard recently that mortgage rates are going to stay a little bit higher for a little bit longer than expected. And if you're wondering why, the answer lies within the latest economic data. Stick around and we're going to dig into it. Hello everybody, my name is Jason Veenstra with the Veenstra Real Estate Team brokered by eXp Realty. And when it comes to mortgage rates, things like the job market, the pace of inflation, or geopolitical uncertainties all have an impact. Another factor is what the Federal Reserve, or the Fed, is doing in regards to their monetary policies, and that may be what you're hearing a lot about in the news today. The Fed decided to start raising the federal funds rate in order to slow down the economy and inflation in early 2022. That rate impacts how much it costs banks to borrow money from one another. And although it doesn't have a direct correlation to mortgage interest rates, those mortgage interest rates are still impacted when the federal funds rates are adjusted. And while there's been a ton of headway in terms of where inflation has gone, it's still not where the Fed wants it. Check out this graph to see where inflation has gone from its peak in 2022 to where it is today. As the graph shows, we're much closer to their goal of 2% inflation than we were in 2022, but we're not there yet. It's even inched up a hair over the last 3 months, and that's having an impact on the Fed's plans. As Sam Cater, the chief economist at Freddie Mac, explains, strong incoming economic and inflation data has caused the market to reevaluate the path of monetary policy, leading to higher mortgage rates. Basically, inflation and its impact on the greater economy are going to be a key factor for mortgage rates moving forward. As Greg McBride, the chief financial analyst for Bankrate, puts it, it's the longer-term outlook for economic growth and inflation that have the greatest bearing on the level and direction of mortgage rates. Inflation, inflation, inflation. That's really the hub on the wheel. So when will mortgage rates actually be coming down? Well, most experts still agree that mortgage interest rates are still going to come down yet this year. It's just going to be a little bit later than expected. Listen to what Mike Fratantoni, the chief economist at Mortgage Bankers Association, said in response to the Federal Open Market Committee decision recently. The FOMC did not change the federal funds target at its May meeting, as incoming data regarding the strength of the economy and stubbornly high inflation have resulted in a shift in the timing of a first rate cut. We expect mortgage rates to drop later this year, but not as far or as fast as we previously had predicted. In the simplest sense, basically what these experts are saying is that yes, mortgage interest rates are still probably going to come down this year, but it's just not going to be as fast or as far as originally hoped or expected. Now, what this means for you as a buyer is that it's actually really hard to time the market. It's very difficult to know what's going to happen and when it's going to happen. If you are thinking about buying a home and now is a good time for you, then let's have a conversation. Let's talk through the different scenarios and figure out how to make that next step forward. As always, you can reach me by emailing me at sold@veenstrateam.com or by calling me at 269-350-5514. As always, stay safe and have a great day.